Good evening, everybody. Sorry for the delay. Computer gremlins on my part. So I'm not going to take very long. Tonight we've got the great pleasure of having Jeff Tompkins here with us, and he's going to show a proprietary indicator that gives you a very accurate reading on trend movement. So Jeff, so I don't take up any more of your time, welcome to the Candlestick Forum. We're anxious to see your information tonight.
Thanks so much, Steve. It's a pleasure to be here. Really appreciate that. So yeah, hopefully everyone can see the screen okay. It sounds like it's best to go to full screen mode so you guys can capture the whole view. And I'm going to be sharing some slides with you tonight, and we're also going to be looking at some live charts. So you want to make sure that you guys are in full screen mode. But with that out of the way, I'll go ahead and get started. So as Steve mentioned, we're going to be looking at an indicator that can help you predict market direction, and it can do so up to 3 days in advance on a daily chart. So we're going to be looking at some daily charts together tonight, as well as intraday charts. So I'll kind of explain how that all works here momentarily. Before I do, I'll read a quick disclaimer. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options and need a broker to trade securities and must meet suitability requirements. We will be looking at some various results today on our session, and just know that those don't necessarily indicate future performance, although performance figures that I share are based on the trade signal algorithms. And of course, due to the time critical nature of trading, brokerage fees, and the activity of other subscribers, there is no guarantee that anyone will mirror our performance. But the performance numbers shown are based on trades users could enter based on the trade signals. With that, we will go ahead and get started. So we'll spend about an hour tonight together, and I'll make it well worth your while. I think you guys will get a lot out of this, and it particularly complements what Steve teaches in regards to candlesticks. So I think it's going to be a great addition to your toolbox, your trading arsenal. And by the end of our session, you'll discover how to use predictive indicators to spot turning points in the markets. And this is valuable information that can be used to help predict markets over the next 30 days or so. And whether you're just starting out or you're a seasoned pro, this is really must-have information for today's markets. So we're going to be looking particularly at volatility on our session tonight because, of course, we're in volatile market conditions, right? And these can be challenging market environments to navigate and trade through without the right tools. So we'll start out by talking about volatility, how it's measured, and how it impacts the markets as well as us as traders and investors. And we're going to do that with the VIX, or the CBOE Volatility Index. And the VIX, of course, is the ticker symbol for the CBOE Volatility Index. And it measures the stock market's expectation of volatility based on S&P 500 index options. And it essentially measures the frequency and magnitude of price movements that a security experiences over a specified period of time. So the more extreme the price swing in the security, the higher the level of volatility. And what the VIX does is it measures expected future volatility. And it's one of the few tools out there, or instruments that we can access as traders and investors, that give us true forward-looking information. So it's as you learn a little bit more about it and how it works, you'll see that it's not using lagging data as most indicators do, unfortunately. So when used correctly, it can be a very powerful tool in helping time turning points in the market. So what the VIX does is it estimates expected volatility by aggregating the weighted prices of S&P 500 index puts and calls over a wide range of strike prices. And the prices used to calculate VIX index values are basically midpoints of the real-time S&P 500 option bid-ask spread quotations. And that's why it gives us a real-time reading of expected moves in the market. So basically, when interpreting the VIX, as you'll see when we look at a chart of it, you'll get, of course, a range of values, right, in terms of price, and the typical consensus is that a VIX reading above 20 indicates that we're in volatile market conditions. And we've been trading above 20 in the VIX here now for quite a number of days. And that gives us a lot of clue to where the market might be headed in the near term. And then a VIX below 20 indicates that we're in more normal market conditions or low volatility conditions. And generally when the market's in a nice steady uptrend, we'll see low VIX values. But it's these swings in the VIX that can give us good indication of overall market direction and turning points in the market. So what does the VIX really tell us? Well, again, it is a real-time index. So if you pull up a chart of the VIX during regular market hours, you're going to see that the price of the VIX is of course fluctuating just like it does with any other security. And what it does is it represents the market's expectations for the relative strength of price changes of the S&P 500. And although it's directly correlated to the S&P, we know that markets are highly correlated. Major indices like the NASDAQ and the Dow are highly correlated. So it can also give us good information across the broader markets. But basically it's derived from the prices of SPX index options, and it provides us a 30-day forward projection of volatility. So volatility, which is basically how fast prices change, gives us insight into market sentiment and especially the degree of fear among traders and investors. So again, when you see the VIX at a high level, let's say above 20, it's indicating that there's a lot of fear in the market. And in that sense, it's inversely correlated to the S&P. So when you see the S&P sell off, you're going to see the VIX spike. And when you see the S&P moving in a nice steady uptrend, you're going to see the VIX retreat to lower levels and typically reside below 20. So again, there's an inverse correlation there. So when the S&P goes up, the VIX typically drops, and when the S&P drops, the VIX typically goes up. So how does volatility impact us as traders and investors, and how does it impact our trading systems, our indicators that we may be using, whatever we're using to make trading decisions, right? Volatility has a major impact, and it can, on the one hand, create a lot of opportunities for us because we obviously need some degree of volatility to create price movement in the markets and provide opportunity for us to make trades and investments. But it can also make things very difficult on us. So, recent times is a great example. Since the start of the year, we've been seeing a lot of market volatility. You see a lot of whipsawing where you might have a big up day on one particular trading session, and then the next day you might have a big down day. And so there's, maybe some degree of broader market direction, but day to day or even intraday, it can create a lot of challenges. And just kind of to paint that picture, obviously, if markets went straight up in a straight line without making any fluctuations, we would all be billionaires, right? It would be very easy to just simply buy and hold and just wait as long as you like to, and wait for price to go up and then sell, right? But unfortunately, it just doesn't work that way. Fortunately or unfortunately, for those who aren't able to navigate, volatile markets, it can be very challenging. But this is really more what a typical price action of the markets looks like, right? It goes up, down, up, down, up, down. There's a lot of bends in the road. And even though you may start at point A and end up at point B, and let's say that was a straight line, right? That would be very easy. You may start and end up at the same point, but in between point A and point B, there may be a lot of twists and turns that make things challenging for us. And so tonight, I'm going to make that easier for you guys by giving you some tools and tips and tricks to help you navigate these types of markets. So we'll look at how to use the VIX as a forward-looking predictive indicator, how to spot potential market sell-offs and corrections, how to protect your portfolio when there's a potential rise in volatility and sell-off in the market, how to buy cheap insurance when it makes the most sense. And that's more options related because you can't actually trade shares of the VIX. If you're going to use the VIX as a hedging tool or a speculation tool, you would need to trade options on that. And we won't get too deep into that tonight just because of time restraints, but we'll kind of talk a little bit about that. How to apply volatility and momentum to any market in any time frame. So regardless of what style of trader you are, or what your time horizon is, or even your time frame on your chart, this is all really universally applicable. We'll talk about how to help prevent entering bad trades. We all have them, of course, and I'm going to show you a way that we found if you're taking a directional a trade and you have a directional bias, to make sure that there's follow through on that direction and you're not just jumping in with hope and a prayer. So we'll look at that. We'll look at some different trade signals and examples together, and then stick with me to the end, and I'll show you guys how you can get access to my top indicator that I use in the markets. And I do trade for a living, so I'll give you a little bit of background on myself. I have over 20 years of experience trading the stock options and futures markets. I received professional training at the trade desk at Morgan Stanley. I'm also the founder and chief investment strategist of Altos Trading. We currently have over 50,000 members in over 100 countries across the globe. It's a really diverse group of members and traders and investors that have different styles, different time frames, different securities that they trade. But a lot of them have found success with our methodologies and indicators. I'm also a hedge fund manager, so I do manage money professionally for my clients at Altos Capital. And I'm the founder and the creator of the Tradetrend signal software, which I'm going to be talking to you guys a little bit more about tonight. All right, so let's start out there, because this is the tool that I've designed and developed to help us identify potential moves in a security with advanced notice. So so many indicators out there are lagging. Some lag more than others, but for the most part, when they give us a reading, in other words, they tell us to buy or they tell us to sell, it's often too late. And that's why I really love Steve's methodologies with candlesticks, because you're sort of eliminating that lagging component and you're reading price action in real time, which can be really beneficial, right? Even if you're trading longer term charts, like me, I mainly trade off daily charts. I really don't do a whole lot of intraday trading. But trading is a very time-sensitive endeavor. So we really have to be right on our timing, and that is particularly the case if you're trading derivative instruments like options and things. So what we've developed is a tool to help us identify potential market trends or momentum, direction with some degree of advanced notice, right? And that advanced notice is about 3 days on it if you're trading off a daily chart. So what the indicator does is it gives us a buy or a sell signal up to 3 candles in advance of the trend. So again, if you're trading off a daily chart, we're looking at up to 3 days in advance. If you're an intraday trader, let's say you're trading off a 5-minute chart, we would be looking at potentially up to 15 minutes of advance notice before a move takes place. And this is accomplished with a proprietary momentum algorithm that is reading the market in real time, or whatever stock or forex pair or futures contract you're looking at. And we've also built into the algorithm a component that gauges that momentum and trend strength and gives us a trailing stop to help lock in any profits on successful trades before the trend reverses on us, because all trends ultimately reverse, right? They don't go on forever. And what happens all too often is if we do get into a successful trade, we, number one, may not know where to get out or how long that trend's going to run. And often what happens is, number two, is that reverses and any profits you had in the trade end up getting wiped out. And often for some people, they even goes from a winning trade into a losing trade, which is the last thing we want to have happen, right? So you'll find that our indicator, Tradetrend, does a really nice job at predicting short-term and long-term trends. And it does it because of the universal applicability to the indicator and the methodologies behind the algorithm, it really doesn't matter what security we use this with, because um, again, the methodologies behind the algorithm are momentum based and they're trend based, and as long as a security moves in one direction, doesn't trade at one price flat, then it can be used for stocks, futures, forex, and it can be used on any time frame, right? So again, whether you're looking at a 5 or a 10 or 15-minute chart or a daily or a weekly chart, it's going to adapt to that time frame. And as I mentioned, we won't really get much into options tonight, but we have a lot of members that use it, including myself, to make more timely and accurate options trading decisions. Because certainly if you're trading directional options, time is of the essence, and it's really crucial that you get the timing correct. So we're going to look at the indicator here in just a second on some charts, and I'll share with you how it works and how I use it. And we'll start out by looking at the VIX, since that's kind of the core of our topic tonight, and how I use it specifically with the VIX to help time market direction, and especially market tops and market bottoms. So just to understand a little bit about how the indicator works, number one, it does not repaint. So what that means is once you have a confirmed signal at the end of the time frame of the candle, and the signal is appearing on your chart, it's set in stone. So it does not, come off the chart a day or two later when the signal may have not worked out. So that's really important. If you have ever seen an indicator that repaints, they look great in hindsight, but when you actually go to use it, you find out that it wasn't showing you what it was actually doing in the past accurately. So that's really an important component. So Tradetrend does not repaint. We also have developed to help protect against whipsaw. So it has some built-in protection there, and we'll look at that here in just a second. You'll also see that it can help you capture a lot of the trend before it reverses. And again, it does that with our trailing stop algorithm. And it's designed to limit losses and let profits run. So when you run back tests on the indicator, you'll find that losing trades tend to be rather contained and relatively small to winning trades. And that's really important because we need to have a positive expectancy if we expect to make money over the long run. Of course, that's what we're here to do, right? So that's also an important component. And it can be used with any other indicator system for added confirmation. And this is why I wanted to share this in particular with Steve's group, because I know a lot of you use candlestick patterns and price action to make trading decisions, and I think that's fantastic. I use that as well in my own trading. And the nice thing is I've found that when I have a reliable indicator that I can use in conjunction with price action and candlestick analysis, it helps improve my overall results and consistency. So I'm hoping that you guys will find that to be the case, and ultimately eliminate the guesswork from your trading and your decisions when making buying and selling decisions on security. So let's go ahead and get into the fun stuff. We're going to start looking at some charts, and what you'll discover is why volatility is really one of the only leading indicators of market direction. So again, we'll start out by looking at the VIX and how that can really give us advanced notice, especially when we're using it with the trade trend indicator. And you'll see how it can actually help us identify when markets may be vulnerable to a sell-off, and how to identify when the market is likely to go up after a sell-off. And not only that, we're going to look at where we might look to take profits on uptrends in the market or whatever security we're trading before it reverses on us. And then again, stick with me to the end because I'm going to show you guys how you can get access to the trade trend indicator. And it's changed my trading forever. It's made a huge difference. I've, like probably most of you, gone through all the trials and tribulations and struggles of being a successful trader, and it's not easy. And I went through well over a decade of making money and then losing it all back, and that's very difficult. So I'm here to help you guys shorten the learning curve to becoming more consistent. So let's go ahead and get into our charts. Hopefully you guys can see the chart okay. Again, you'll want to be in full screen mode here because that will allow you to see exactly what the whole chart and exactly what I'm talking about. Let me just grab a drink of water here real quick, and then we'll start the fun stuff. All right, so we've got a chart of the VIX pulled up. We're just looking at a daily chart here, and today the VIX closed a little above 30. So we're still in volatile territory here, right? Remember I said a reading above 20 is considered volatile market conditions. So interestingly, like since let's say early 2020, when we saw the major market crash surrounding the advent of the COVID pandemic, we've seen a lot of VIX spikes, and you can see those all over the chart here. So a VIX spike is basically when the VIX is below 20, and then it shoots up above the 20 and then comes back down. So we've seen a lot of that. I mean, this is just going back a year. We could expand this out to 2 years, and you're going to see these a lot of these VIX spikes, right? And we got the really big one back in March of 2020, right, where the VIX spiked up almost to the 90 level. So typically what we'll see, especially in a bull market, is we'll see the VIX spike and then come back down. That's generally kind of a standard pattern when we're in a bull market or an uptrend. And this is beyond the scope of our session today, but I talk a lot about this with our members and how I strongly believe the secular bull market has ended, and probably likely ended back in 2019 or 2020. But even though a secular bull market ends, we tend to still see some kind of overzealous or euphoric buying into that secular bull market. So you'll often see the market continue to go up and even for another year or two before the whole structure really changes. And I believe that's happened. And although we're not technically in bear market territory on the S&P, our recent peak to trough sell-off, I think, was around 15%. And it would take a sustained downturn in the markets from the highest peak to a 20% trough or greater. So we're not there yet. But interestingly, what's happening here with the VIX is we're not seeing it retreat back down below 20 for very long. So starting this year, which is right here where I've got my crosshairs, January, we were below 20. And we got the big spike in January, right, when there was the January sell-off. We got the retreat, but it didn't retreat and close back below 20. Instead, it found support at 20 and then spiked back up. And this is kind of more of a sustained rise in the VIX versus a rapid spike and decline. So you'll notice that there's a series of, and we're going to talk now about how to use this information in the indicator to help us navigate these types of market conditions. So you'll notice that there are some symbols on the chart, and I'll zoom in for you so you can see these a little bit better. So the green arrows that you see here, like this one on January 5th, is a buy signal. Now remember, I said that Tradetrend is designed to give us advanced warning, or maybe warning is not the right word, kind of advanced notice of an anticipated move or direction in a security. So what that does is it tells us kind of to get ready. And this is where you might use it alongside something like candlestick analysis. When you see the anticipated direction to the long side, you may look for a bullish candle, and we certainly got that here. So with the VIX, what we're looking for are buy warnings below the 20 level. That's our warning that that the market may be vulnerable to a sell-off, because remember, the VIX is inversely correlated to the S&P. So when the VIX spikes, the S&P sells off. So there was a warning, as you can see here from the green arrow, on January 5th on the VIX, and it was below the 20 level at the time. That particular day, it closed just below 20 at 1973. At that point in time, the algorithm's going to give us a suggested entry price. Now, remember when we started our time together tonight, I mentioned that we want to look for follow through on the anticipated directional move. We don't want to just jump in. And how that can actually help us eliminate a lot of bad trades. Most people will jump in on a signal or some sort of anticipation that a security is going to go in one direction with a limit order or a market order. The problem is a good majority of the time that may not follow through, and we end up in a losing trade right off the bat. And that can be problematic, right? So we designed this algorithm to project a future price. So in the case of a buy signal, it would be at a price that's higher than the current closing price. Um, and if that price is not reached within the next 3 candles, and since we're looking at a daily chart here, that would be over the next 3 days, then we simply would not take that trade. We would cancel out any open orders and move on to the next opportunity. So the way that we know that, and by the way, the entry prices are given to you right on your chart. This is for a current signal, so it's not related to the one we're looking at now. But the entry would be above the high of the candle on a buy signal. Okay, so our suggested entry would be right above the candle here, just above 20. And the way that we know, obviously by looking at the candle, is if the high of within the next 3 candles reach that entry price. And the algorithm actually confirms that with a little dot there on that candle. So that may be a little hard to see, but there's a green dot there because in this case, the entry price was reached on the next trading day. Okay, so that's our confirmation. And if we were to take a position on that signal, that would get us into the trade. But let's back up just a couple steps and talk a little bit about how that can give us good information on the VIX. So again, we got the buy warning on January 5th. Well, at that point in time, and you can see it was a good indicator of the market sell-off because the VIX spiked up close to 39. But at that point in time, the market was had been in an uptrend, right? We were hitting new all-time highs on the S&P. So remember this date, January 5th, right? Because that's our warning. We got the buy and the VIX was below 20. That in the context of the major indices, or the S&P in this case, can help us determine that any sort of uptrend in the market may be losing steam or turning around. Because if we go over to the S&P, the SPX, and we look at the signals from Tradetrend on the S&P, we see that the same day that there was a buy warning on the S&P, or sorry, on the VIX, there was a sell warning on the S&P. So there's the red arrow right there. Zoom in a little bit more for you. So there it is. And so January 5th, that comes in. There's our sell warning. Again, that's not to say jump in the market right there. If there's follow through, in this case there was the next trading day, you can see the entry price was triggered there, then our most likely direction is to the downside. Now, interestingly, the S&P hit its last all-time high on the day before, January 4th. So when we look at the sell signal in the context of this recent all-time high, as well as candlestick price action, right? So we're seeing some significant bearish candles here that are wiping out a lot of the previous day's gains, and we're closing below a major support level. Not only that, we've got several sell signals all in this 4650 to 4800 range. So that should alert us in the context, as well as the buy signal on the VIX that came in on the same day, that the market is vulnerable to some degree of a sell-off. Okay, and of course we know now in hindsight that that occurred. So we're going to get back to this in a bit, but I want to also point out here that the indicator, of course, doesn't just give sell signals; it gives buy signals. So oftentimes after these types of sell-offs in the market, we can get really good buying opportunities. And you'll notice the accuracy here of the indicator, where we got a buy indicator. And interestingly, this one came in on a bearish candle, but then we did end up getting a bullish pattern, candlestick pattern here a couple days later. But we actually got the notification a couple days before that bullish candle came in on the 28th. So on the 26th, the algorithm anticipated that this sell-off that's been taking place over the course of January is losing steam and turning around. And I often look for these at major support levels. So if we go back here to early October, we see that was also a level of support. So using this information in the context of the VIX, so let me go back over to the VIX again. So remember, this was on January 26th. We see that the VIX has spiked. In fact, it spiked a couple days earlier on the 24th and gave us also some advance notice that the sell-off would be losing steam and turning around. There's the sell warning on the 27th, and there's the VIX retreat back down into the 23 level. Okay, so you can see that. Oops. You can see that has given us really valuable and timely prediction for what's happening in the S&P when we look at it as it relates to the VIX. So actually, let me go back over to the VIX real quick. So what I'm really looking for is resistance levels in the VIX. So we see there's a lot of resistance up here in the 36 to 39 zone. And I want to look for rejection of that with some bearish price action and sell signals. Okay, so that in combination with buy signals on the S&P, like we looked at here on the 26th, with a confirmed entry, and see how this gave us a few days of advance notice. So on day one, because our entry would be here just above the high of the warning candle here, day one, we didn't get any follow through. In fact, we got another bearish inside candle, inside day here. So the high and low were within the range of the high and low from the previous day. Then we got a bit of a fake out here with a false break of the inside candle and a bullish reversal. And not quite an engulfing pattern, but a strong indication in combination with what we've looked at with the algorithmic signals that we can expect with some degree of likelihood and really quite high probability that there's going to be an upward move in the market. And you see that triggered on day three. So there was the follow through, and we got a nice move up from around 4450 to almost 4600 on the S&P. And then, we sort of went into this, I call it like an M pattern. You see kind of looks like an M or a double top here. We get a bearish candle on February 10th, and then another sell signal from Tradetrend. So again, this was a great sell signal because it jived with the candlestick price action. It was off a resistance level right around 45.50, and then we had the confirmed follow through on the very next day before the market sell-off resumed. Okay, so we'll look at a few other tickers together just to kind of give you a picture of how this looks on like individual stocks, and we can look at other securities like Forex. Micron's one that I really like to trade, and I'll just kind of show you some recent signals on Micron. I want to find one too that has a current live signal so I can kind of demo that for you. But Micron's been pretty choppy lately. It's really in a bit of a range. It had a nice uptrend late last year. We actually got, and just to kind of show you the incredible timing of these confirmed signals, you can see this one here from December 14th. There was the buy practically at the bottom of this sell-off. And look at the move off that level right there. There was the confirmed trigger the next trading day on the 15th. One other thing I want to point out, not all mornings result in a triggered trade, right? Because again, if there's no follow through, then we don't want to get into a trade. So for instance, here was a buy up here. I wouldn't have taken that. It was at the top with a sort of a shooting star pattern. And this one did not result in a triggered entry. There was a sell. Again, no triggered entry. And that's why you don't see the red dot, because we didn't have follow through on that particular candle. This one did trigger and follow through for a bit, we kind of got a little bit of sideways price action there. This would have been kind of a break-even trade, um, and then another buy signal with a confirmed trigger. So again, that's why we've designed the algorithm to only get us into a trade if there's follow through with the anticipated direction. And you can see that it gives us really nice timing within trends. So we got some nice buy signals here within this broader trend, but also at market tops and bottoms. Like here on January 5th, this is when the broader markets, the major indices sold off, right? And also in this case where Micron hit an all-time high for the year at 98.45, and we got a sell signal with a nice bearish shooting star pattern and follow through on the sell. We actually got two sell signals here with follow through all the way down into the 74 level. We got another one up here, so we got a rebound. The algorithm picked it up right there on February 1st, and then we got a move up, and then a sell signal and a move down. So now I'll point out what these horizontal lines are. So depending on how you're using the buy and sell predictive signals, um, you may want to use the trailing stops. Um, if I'm, for instance, using these signals to make option trading decisions, I won't always use the trailing stop. But if I'm trading, uh, shares directly of the stock, I will, and I get into a nice successful trade, I'll use the trailing stop. So that's the horizontal red and green lines that you see here. So you can see on this sell signal, we have our stop levels. So at the end of every candle, it's going to tell you where to place your stop to help lock in profits on your successful trades. And you can see how it did that very nicely before this reversed, went back the other way. And then we got the buy signal here in early February, and we're off to the races. And you can see that the algorithm gave us a nice trailing stop level. So the entry on this one would have been around 82.50 a share. It trailed our stop up to 90.50 a share, right? So that's a nice 8-point move in Micron before it reversed on us. As you can see, obviously it did here significantly. So this is what can help us lock in profits on successful trades and prevent those from getting wiped out on a trend reversal. Okay, so there's the algorithm, how the trailing stop algorithm works on that. So we'll look at just a couple others. Amazon's a good one to look at because it's very volatile, especially lately, really big swings. These are the kind of stocks that can be very difficult to trade when they're making really big price moves. You can see obviously here early in the year, or actually late last year, Amazon was topping at around 37.60. We had kind of a double top there from back in July of last year. We got actually two very nice sell warnings from Tradetrend. In this case, the last one that we got before this major sell-off into the 2,700 level came in November 22nd. There was the confirmed entry the next trading day on the 23rd. There's the sell-off, and you can see how we got several sell signals on the way down, but you can see how the trailing stops helped lock in profits that you may have had if you had entered short on this sell signal before it reversed. We actually got a very nice buy signal here on January 28th. And I zoom in on that one here. So there's the 28th. See how Amazon sold off into the 2,700 level. It's kind of consolidating here. We get a bullish candle with a buy warning. So at that point in time, we would have placed our entry if we wanted to take a long position on Amazon on January 28th after the markets close. We place our buy stop order just above the high of this candle, and see that was reached on the next trading day. And we get this nice up move with our trailing stops to lock in profits before this reversed all the way back down into 27 and formed a double bottom. Let's see. Let me look at one more. We often get requests for leveraged ETFs, so we can look at the SPXL. Actually, this is a good one to look at because there's currently an open signal on it. This is the Direction Shares triple X leveraged S&P bull ETF. So basically, on a daily basis, it's designed to create 3 times the return of the S&P 500 index. And so leverage ETFs, are not designed to be buy and hold instruments because they're subject to things like beta slippage and they're really meant to be intraday trading vehicles. But this is a good demonstration of how the signals can even help us with instruments like leveraged ETFs. Again, we got the sell warning there back in early January, and nice sell-off. Then we got a buy signal, then another sell. This buy didn't really go anywhere, but now we've got a sell. Um, and and by the way, so this buy hit the entry price, but basically then reversed back down. So this is, you can see when we get into these successful trades, like the previous sell signal, they tend, to run for a significant amount of time or distance. And that's where we want to see any strategy or indicator or methodology that we're using uh, do that so that we have a positive expectancy. And when we do have that inevitable losing trade, it's relatively small trade. And you can see in this case, that trailing stop algorithm really helped us there, and it limited that trade that didn't really follow through. So that's really important. But let me demonstrate this current sell signal. So there was a sell signal on March 8th on SPXL. It has not yet triggered. So you'll notice, and it may be a bit small to see, in the upper left of the screen, it's telling us what order type to use. So a sell stop limit order, and at what price. So in this case, that would be 92.27. So the suggested entry is right down here at 92.27. So kind of right about there. So just a little bit below the low of that candle. Now, we haven't had the follow through yet, right? So you can see that over the last 2 days, the sell-off in the SPXL has not followed through. So if we decided to take a short trade on SPXL with an entry down at 92.27, if we don't get follow through by tomorrow at that entry price, then we would go ahead and cancel our order out. And so that's what helps us stay out of a lot of bad trades. We're not just going to jump in, because if we had seen the sell warning and then got in with a market or limit order the next day, we right now would be in probably a losing position, right? Because the SPXL has been closing up on the day over the last 2 days. So that's basically how the algorithm works and how it gives us up to 3 days of advanced warning on a daily chart. Let's look at a Forex pair real quick, and then we'll look at intraday so you can kind of see what that looks like, because it's obviously going to give us a different amount of advanced warning based on the chart time frame. So let's look at the pound yen, because that's a volatile Forex pair. You can see it makes really big price swings and basically in a range here from 149 to 158. And you'll notice, just from a high level overview, we're looking at a year's worth of price data here on the daily chart. The incredible accuracy of these buy and sell signals near major tops and bottoms. So again, I don't want to take these blindly. I want to use them with candlestick patterns, support and resistance levels, broader trends, and things of that nature. So like this would be a really great buy signal here on December 8th, because it came in at a major support level. You can see here down around 149. And then, and again, this one came in with bearish candlestick patterns, but that ultimately shifted. We started to get bullish patterns, and then we got the up move. And then we actually got another buy signal on December 22nd, and then a confirmed trigger the next day on the 23rd, and then a really nice move up into this previous resistance level. And then we actually got another sell signal up near that level. There's the sell-off into a support level. There's our buy warning on January 27th. There's another nice move up. There's another sell signal. Technically, that one didn't trigger in the first 3 days, but a lot of these signals will ultimately end up triggering, just maybe not within the 3-day time window that we've set up the algorithm to really be designed for on a daily chart. So that's a pound yen. Let's look at intraday. So real quickly, we'll look at let's just go to like a 30-minute chart, so you can kind of see what it looks like intraday. And actually, there's there was just a recent buy on pound yen today, closed out with a small little profit. It looks like it's starting to reverse on us. So the trailing stop algorithm actually helped nicely there. Lock in the profit from the triggered entry, which is down here. So just a small little profit. Not every trade's going to be a big winner, but you can see that there were a number of big winners here today. There was a sell signal, nice sell-off, another one, big sell-off. So again, when we're using this in combination with candlestick patterns and major support levels, and in the case of the U.S. stock markets with the CBOE Volatility Index or the VIX, it can really be an incredible tool to help us time these entries. But again, I believe in Steve's methodologies and not just relying on one indicator or one tool. So I think it's really powerful when you have something that can accurately identify these momentum shifts and trend reversals in combination with something like candlestick patterns or support and resistance levels, or a moving average. A lot of, I like to use the algorithmic indicator for, with moving averages. So, let's say a stock's in an uptrend and we get a buy signal off of a bounce off a moving average, like the 50-day or 200-day EMA, those can be really, really good signals. So that's intraday on the pound yen. So I'm going to pause there just for a moment and see if there are any questions that have come through. If I haven't been monitoring the chat, I apologize, it's difficult when I'm presenting, but if Steve or Becky or Richard have any questions to relay to me on that, you can go ahead and let me know.
All right, does anybody have questions for Jeff? Well, Magic, okay. Jeff, Magic wants to see what the chart is for AMR, which has been a steady uptrend.
Okay. Any particular time frame, or I'm assuming daily?
I'm guessing daily. Is that right? Yeah, daily chart.
Okay. Yeah. So this is not a name I'm familiar with, but Alpha Metallurgic Resources. It looks like AMR. So yeah, very almost parabolic here on AMR. The last, well, actually, we're in a current buy signal. This is one I would probably ignore since it's at a top, even though it is a strong bullish candle. What I like to look for are buy signals within kind of mid-trend or off a major level again. But I like this one down here on, let me zoom in a little bit. January 31st. So there's our buy warning. So again, we wouldn't buy shares of AMR on January 31st. We'd wait for the market to close. We see that there's a buy, predicted buy signal. Our suggested entry would be just above the candle here. It's probably somewhere in the neighborhood of 65 a share. That of course was triggered on the next day. And then we get the nice move up. If you're using the trailing stop, this got us out with a nice profit. But because we started the trailing stop algo is basically looking at things like average to range and volatility, an increase in volatility to a degree that the algorithm feels that it's needs to protect from a reversal. We may get stopped out before the trend continues. But again, it depends whether you're using the trailing stop or not. So then we were kind of no signal here, no follow through on that sell. There was no confirmed entry. But then another nice buy here on March 2nd, and very nice move up. This is actually still an open signal. So the March 2nd buy entry would have been right here around 107.50. Closed today was 136.66. And you can see the trailing stop has now been trailed up to 115.60 roughly there on this one. So this one's still open. And then we got another buy with, you can get buy signals within other buy signals, or conversely sell signals within other sells. That might just be an opportunity to add to a position if you choose to do so, or just further confirmation that the position that you're in is working out nicely. Although we did get a sell warning here yesterday that has not followed through on the suggested entry. So you can see up here the sell stop limit would be down at 115.52. So that's right about there, right where our trailing stop line is. And that's where we'd want to take profits on a long position if those reverses. And if we wanted to take a bearish position, we'd want to wait for that follow through down to that 115.52 level that the algorithm gave us. So there's still 2 days left on the sell warning because we've already had day one here. The buy warning that came in today, there's now 3 days left on that one. So great one to look at. Thanks for sharing that. And again, just to kind of give you a broader perspective, you can see all the buy and sell signals as the trend progressed here. So that's a great one.
Okay, and Haroon is asking what does it take to get this indicator?
Okay, so I'm going to get over to that here and give you some details on how to get the indicator. So before I do that, because anytime I offer a tool or an indicator or a strategy or anything of that nature that I'm teaching people, there's one thing that while I don't particularly like to do it because I'm actually quite a modest person, I do it not to brag, but to back up what I'm providing with real money results. So I strongly believe in that. Anytime somebody teaches you something or sells you something, they should be using it themselves, or at least demonstrate that they have used it to make profitable trades and demonstrate profitable results. Otherwise, they're basically selling a snake oil. So so what I did is I took one of the worst sell-offs we've had of late back in February, March 2020 during the Corona crash. I used the trade trend indicator, number one, to help warn me of the sell-off as the market was hitting new all-time highs, and to allow me to short. I mentioned I trade futures to allow me to short some of the E-mini futures like the ES and the NQ, and then use the trailing stop algorithm to lock in before the market reversed. So I was being pretty cautious. This is my TD Ameritrade statement from February of 2020. Because of the current market situation and the COVID pandemic, I was trading relatively small. You can see that my contract sizes were only 1, 2, 3, 4, 6 at the max. So I was trading relatively small. But I still came out nicely at the end of February with over a $13,000 profit. Then as the market sell-off started to lose steam and I got the buy signal from the trade trend algorithm, I started to get more aggressive and go in a little bit bigger. And this is where I began buying in March as the market was bottoming and I got the buy warning from trade trend. So at the end of the month there, I cleared over 27,000. Again, trading very small positions on E-mini futures. So just 1, 2, 3 contracts. So over the course of February and March, when hedge funds were going under, people were losing their retirements and all these terrible, terrible things. Again, not to brag, but just to demonstrate what I'm teaching you and the tool that I'm offering to give access to you help me do. So again, just really want to emphasize that and back it up with real results. And not only that, not to do that in easy market conditions, to demonstrate it in a very difficult market situation. So that's what I'm here to help you guys with, to help you use the indicator, number one, and apply it to any market, any time frame, whatever you trade, even if you're just starting out with a small account. It's all scalable, right? So it's a tool that helps you determine where the algorithm anticipates the market's going to go, or whatever security you're looking at. Beyond that, it should be used with other important critical aspects of trading and investing: money management, risk management, other tools like candlestick pattern recognition, things like that. And what really makes it unique relative to other indicators is that it gives you those buy and sell warnings before the anticipated move. Okay, so again, on a daily chart, that's going to be up to 3 days in advance. But regardless of what time frame you're trading, you're going to get a buy or a sell up to 3 candles in advance of the anticipated move, and that's valuable, right? And not only that, if the anticipated move doesn't take place and the suggested entry price isn't reached, then you can go ahead and cancel that order out and wait for this next signal. So it's going to help keep you out of potentially bad trades as well. There's still going to be losers. They're inevitable. But as you saw, those are typically well contained if the follow through doesn't take place. So these are just some examples from major market events like the flash crash of August 2015 and the sell warning before the market tanked, obviously very quickly over the course of 4 or 5 days, and then the double bottom with a nice buy signal in early October. This is going back well over a decade to the 2008 mortgage crisis. People were getting overly optimistic about the market and where it was going, and it was hitting new highs, and obviously it trapped a lot of people. Luckily, Tradetrend gave the sell warning there around May 21st before the market lost over 50% over the course of the next 6 months or so. So you can see that even in very extreme market conditions, this is the 2000.com bubble, it gives nice warnings of these major turning points in the market. So again, just more proof of me using the indicator myself in my own real money TD Ameritrade account in the futures market. Again, just to back up what I'm teaching you, show you that it has worked well for me. Again, not every trade's a winner. I've got some losers in there, but the key takeaway here is that typically the losers will be well contained, and you can see that my winning trades far outpace my losing trades, and that's critical to achieve a positive expectancy in the market. So again, I want to help you guys be successful in the markets, and I'm going to give you access to my Tradetrend indicator starting tonight. So you can begin using it as early as tomorrow. We'll get you set up as quickly as possible, and this is a one-time opportunity to join me to discover how I trade with consistency using the Tradetrend indicator. So I reveal all of my techniques and different strategies and things that I've used to be successful in the markets, and I don't hold anything back. So I'm going to talk to you a little bit about our live weekly trade sessions that we hold on Tuesdays and give you an opportunity to join that if you decide to check out Tradetrend. And on those sessions, I do a lot of teaching around the indicator and the different strategies. So the package comes with an entire year of Tradetrend on a platform of your choice, and I'll give you some information on that, on what it's available on. It includes the exact entry and exit signals as I demonstrated for you tonight. You get the trailing stop levels for any triggered signals. You get the live interactive trade sessions, and again, I'll give you more info on that in just a second, but we hold those weekly. You also get members area access for our replays and recorded training sessions if you're not able to join. You get full support and coaching from me on those sessions because I host those myself with Richard and Craig and some of our other team members. So I'm there personally to help answer questions and help coach you to be successful in the markets with my tools. And I also am going to throw in my top 2 weekly Tradetrend picks every Monday. So as you're starting to kind of get comfortable with the indicator and using it in your own trading and investing, I'll throw out my top 2 picks that I identify every Monday evening, email those to you. We also post them in our members area, so you can kind of follow along with what I'm spotting and get a feel for sort of how I use the indicator in live market conditions. And ultimately, our goal is to help you cut the learning curve to consistency and profitability. That's why we're here. So I'll take some more questions here in just a second. Typically, the first question we get is, well, what platforms is it available on? So we've developed the Tradetrend indicator for a number of charting platforms and broker platforms. So it's available for TradingView, which is an online charting, kind of cloud-based charting platform. It's available for Thinkorswim. It's available for NinjaTrader, TradeStation. So those are our broker platforms, and Metastock, which is a downloadable charting platform. So those are the platforms that we have Tradetrend available for, and you get your pick of whichever platform. Each license is good for one platform. So if you decide to check out Tradetrend for yourself, right when you do that, you'll get the ability to select which of these platforms you want it on. If it's not on your broker platform, that's perfectly okay. In fact, I don't even always use it on my broker platform. For instance, I use TradingView as well. I really like the cloud-based charting. So often I'll just take the signals off the chart and then take the suggested entry price from the algorithm and enter it with my broker. And again, I trade with TD Ameritrader, Thinkorswim. So we're going to throw some other things in with the package, not just the indicator, because I don't believe in just giving somebody something and saying good luck. We want you to obviously be successful with it and continue to use it for a long time to come. So we're giving you the 12 months of the indicator on the platform of your choice. Normally the indicator retails for $1,499 a year. So if you went to our website, that's the price for an annual subscription. And then we're also going to give you access to our live trade sessions. So again, I host those with Richard and Craig, and we help you guys navigate market conditions and show you how we're interpreting the signals in actual market conditions. So we do those every Tuesday. Normally that retails for $550 just for our live session, but those are included in the package. And again, we hold those every Tuesday, so our next one will be March 15th, and those are at 7 p.m. Eastern time. So you're also going to get access to those, as well as personal coaching from me. So normally I charge $19.97 for personal coaching in a live coaching environment, and you're going to get access to that as well on our Tuesday live sessions. So again, I host those. We will never hold a live session where I'm not present. We're also giving you access to our invitation-only Facebook group. That's retails for $199. We have a little under, I think, 900 members who use a lot of our strategies and tools like Tradetrend, so you'll get access to that as well. We're also throwing in an entire course of all of our best strategies, including options, stocks, futures, in our professional trading series. So it's over 10 hours of online content. You can watch it at your leisure and learn how we trade the markets. Normally that retails for $900. So we're throwing a lot into the package to help you guys be more consistent with whatever you trade, stocks, futures, Forex, options. And we do cover, on our Tuesday sessions, we'll often cover like a different option strategy or a different strategy on every session, as well as market analysis. So we do a lot on those. They're really great. And you'll also, if you join tonight, you'll get access to all of our past recorded sessions. So there's a lot of learning there that you get right off the bat. And as I mentioned, as a bonus, we're throwing in our my two top weekly trade trend picks every Monday. So I email those out to you every Monday. Normally that retails for $9.97, but we're throwing it in as an extra bonus. And then I'm also going to throw in bonus number 2, which is my ebook, How to Create Risk-Free Trades. That retails for $97. It's a great money management ebook that shows you different tips and tricks on money management to help mitigate risk in trades, and even in some cases eliminate risk in a trade. So it's very valuable and a great tool to use alongside the trade trend indicator. So that's everything that comes with the package. So obviously the retail value is very high on this. It's over $5,000 if you were to buy all of these from us individually. But we have put together a very special deal for Steve's group. So this is only for Steve's group. We don't do this outside of the group at the price I'm about to show you, because we'd probably go bankrupt. But we are going to do something pretty outrageous here, because normally we don't discount it this much, but we're taking 95% off if you join tonight. So if you join tonight, it's only $297 for the entire year of the signals, and then everything else you see in there you get for life. So the subscription to Tradetrend is good for an entire year. So it breaks down to less than $1 a day. And if you decide you want to continue using Tradetrend down the road after your year of signals, you're then grandfathered in. So there's no contracts or commitments or anything of that nature. So obviously, if you don't want to continue, perfectly fine. You're not locked into anything after your subscription ends. But if you do decide you want to continue, you'll never pay the full $1,499 for the 12 months of Tradetrend. You get it at the $297 price. So we are going to limit this, and the reason that we do is not to create some sort of marketing ploy or anything of that nature. It's because it does take our team a significant amount of time and effort to help you guys get set up with the indicator and get you up and running, and then to help you on the coaching sessions every Tuesday. So as much as we'd love to take everybody, we do limit it to 25 each time we do one of these events, because we can only take that many on at one time. So if you want to claim one of the 25 seats, you can go to altostrading.com/TT. And again, it's only $297, 95% off the retail price for everything you see here in the package. I had a few more slides, but I know we ran over, so I don't want to take up too much of everyone's time. But basically, we do have a money-back guarantee. So if for any reason you're not happy with anything in the package, we do offer a 30-day money-back guarantee. So if you're wondering, I want to check this out, but I'm scared or something like that, not to worry. We do offer a full 100%, no questions asked money-back guarantee within the first 30 days. So there you have it. I'll go ahead and open it up to questions. Let me actually get to my, there's our guarantee. I'm just going to kind of fast forward through some of these and give you our, because I kind of ran over, give you our contact information if you have questions. You can email us at support@altostrading.com. The office is closed right now, but we'll get to those first thing in the morning. Again, there's the link for you to join altostrading.com/TT. And then I'll go ahead and pass it back over to Steve if there are any remaining questions before we sign off for the night. And there's the package again for those of you who are interested.
Jeff, it looks like you covered all kind of or most of the general questions. So all I can say is, if you want to add another high probability indicator to your trading arsenal, take a look at this. Again, you've got 30 days to look at it, and if it doesn't fit into your trading, you're going to get your money back. But the reason we have Jeff on is because we like to find people that have high probability research on what has worked in the past, so that you can formulate it into your own trading and take advantage of that information. So I guess with that, I'd say magic, you probably just asked for a refund. So let's see if there's any. WB is asking, can you give a buffer to allow listening for the recording tomorrow? I was out of the room. A buffer of time to buy tomorrow at.
Yeah, we can't. So if you're very serious and you missed anything and want to review the recording, that's fine. Would you please email us again, support@altostrading.com, and let us know. That way, because we do shut the sales down, so we'd have to reopen it for you, and we're willing to do that if it, a case where somebody missed part of the recording or something like that and need to review it. But please email us and let us know that, so we know that that was the situation. That way, if it hits the limit, that we can know that why that was, and then work with you on that.
J. Rob says, I am trying to sign up, and it says it's submitting, but not going through.
It could just be a lot of people hitting the page at once. Please give it time. If you do, take a screenshot or a picture of that, please, because if something happens and it gets shut down, and we know that you tried to make the purchase, we'll also make an exception for that. So please don't resubmit it, because we don't want you to get double billed. Let it run, and if you have any trouble, just let us know. And don't worry, you're not going to lose your spot if you tried to buy it. So we'll work with you on that as well.
I think Richard put in the answer to that question earlier, that you can do, it finds lists of buys. So if you scroll up.
Oh, yeah. Yeah, great question. Yeah, so on most of the platforms, you can scan for buy and sell signals. The only exception is TradingView, and it's not because of us. They simply don't have scanning functionality within their charting platform. But like on the others, Thinkorswim, TradeStation, Ninja, Metastock, those you can. We also include the scanner. Sorry, I forgot to mention that. So not only do you get the indicator, you get the scanning files as well, so that you can scan all of the securities that you're considering trading. So it'll scan across the entire market, and it does it pretty quickly. So absolutely, that comes with that as well.
All right, Decron says if you're having the same problem, Richard has put their email link up there. Just email and tell them that you're trying to get on, so at least they know you were doing it. Do your materials work on a Mac? And
Yep, yeah, it can be used on a Mac as well. The only platform that is a little tricky with the Mac is the Metastock platform, but all of the others, yes, it would work.
okay. Barry, again, if you're having troubles getting on, it must be people already trying to get on. Just email real quick to their link and say you're trying to get on, so that at least you hold a spot.
Yeah, we'll make sure everybody gets taken care of tonight. Yeah, not to worry.
Yep.
Yeah, Richard put the email there in the chat. And again, if you have any other questions, email us. We'll do our best to get back to you as soon as possible.
All right, Magic. The email address is right above your question. All right, very good, Jeff, and thank you, Richard. Good stuff. Again, anything that you can add to your trading arsenal that improves the probabilities, obviously, the better off you're going to be. So take a look at Jeff's information. It's good stuff. And again, it allows you to get set for that potential reversal. Each alert comes
so much,
to
Steve.
297.
I appreciate it. Yeah. Appreciate you having me.
All right, thank you, everybody. We'll see you bright and early in the chat rooms tomorrow. We'll see you then.
Thanks, everybody. Take care.